Yes, it is.
We
Okay.
can see.
Yeah, thank you. Oh, okay, good afternoon, everyone, and a warm welcome to this session, which is basically would cover here all the basics of accounting. Good to know the concept and conventions and accounting cycle, couple of topics I mentioned. So this is my little introduction. My name is Sami Owais, and I'm an MBA finance graduate and also completed CS executive and work for a couple of financial companies within like Hyderabad. Currently working in Apex Fund Services as an AVP. So this is, and I do carry some 13 plus years of experience, mostly into fund accounting side. Moving on, so this is like the today's topic I am going to cover. Like we'll understand what is basis of accounting, what are the different types of accountings available, and which is the like most preferred way or preferred method people use, and accounting equation, what is that, how it is got created. An accounting cycle is nothing but the like a step-by-step process, I would say, for the accounting to get completed, starting from the recording the transaction, moving on to the like financials. And the last one is very important is we'll understand a couple of concepts and conventions which are very important for all the accountants to know about. Yeah, as stated there, the first part or the first topic is basis of accounting. So there are like widely there are two bases of accounting. There are two types of accounting, I would call it as. One is like cash basis and the accrual basis. But I say cash basis is it is nothing but it is just plain accounting which is followed by small businesses, small shops that can be considered as the cash basis. When we say cash basis, it is nothing but all the transaction would be recorded when the cash is involved. For example, if I'm buying something, I'm going to Kirana shop and buying some groceries, right? So I'll give them money, and that particular transaction they considered as a accounting entry and book that in their records. So basically, cash basis of accounting is very simple. Whenever the cash is involved, they'll record. Whenever the cash is coming in, going in, the records would be reports would be like it would be recorded in the books of accounts. On the other hand, the accrual system or the also called as mercantile basis of accounting, which is like very famous, which is widely used. If you look at the companies, right, companies into the market or the if you're talking about some big companies, medium to big size companies, they all directly or indirectly following the accrual concept of accounting, or also called as mercantile. So this is accrual concept. When we say accrual, it is nothing but the double entry bookkeeping system only. You might have heard, right, while in college, double entry bookkeeping. So accrual system is nothing but the double entry bookkeeping system. So what do I mean by double entry bookkeeping system is it says every transaction which I am recording into my books should have one debit, should have one credit. In other words, it is also called as like giving aspect and receiving aspect. At least there has to be two aspects. Something should go, something should come. So that is called as accrual concept. We understand about this concept in the coming slides as well. So this is what we have like already discussed. Oh, this is also called a single entry bookkeeping system also, because you are just going like one way and recording your transactions. You are not keeping off any outstanding thing. Okay, you're not talking about anything which is prepaid. You have paid in something in advance. You are not talking about not recording anything. That is the reason, like it is like one way bookkeeping you are doing, one way accounting you are doing. That is why it is named as single entry bookkeeping system. Moving on very quickly to the next topic is accounting equation. This is very important, guys, to understand the the relationship between your assets and liabilities. Can anyone type in like where do we see the assets and liabilities and owner's equity? Which statement or which financials we see this?
Balance sheet.
Uh, uh, yeah, you can type in rather than, yeah, if everybody talking, that would be, yeah, rightly said. Most of you are typing, it's a balance sheet item. So as we follow the double entry bookkeeping system, right? At any given point of time, my asset should be equal to my liabilities plus owner's equity. People get confused here. Whenever we are talking about liabilities, people get confused here with the owner's equity. So liability is nothing but liability is just, you can term this liability, right? This liability as the outsider's liability, and this owner's equity as the business owner's amount. So when I club all the liabilities, which so what is liability? Liability is nothing but it is a responsibility to pay. Responsibility to pay something, it's called as a liability. So liability plus owner's equity. Owner's equity is nothing but the whatever the amount the business owner or the businessman has or the equity shareholders have kept into the business, that is termed as owner's equity. Simple words. If you are a businessman and if you are investing some 10 lakh rupees in your business, that is nothing but your equity. And these liabilities are if you are taken some loan from outside to smoothly run your business, or any suppliers from there, you have taken any kind of credit. So all those kind of liabilities would come here, and this is your amount which you have kept into the business. So always remember, at any given point of time, your assets, all assets. So assets, what are assets? Assets are nothing but the like your own property, whatever you own, that is called your assets. Whatever you owe, OWEO, whatever you owe is called your liabilities and the owner's equity. So when you must be thinking now that you are a businessman, then how should I owe to myself? So the next concept, right, when it comes, we'll understand more what I am talking about. So for now, just try to understand assets should be always equal to liabilities plus owner's equity. This is called as owner's equity. This is called as the normal equity. This is also called as capital. It can be used in different terms and words. Yeah, these are the various combinations, two combinations rather. So this is a combination one which says, so here we discuss about assets is equal to liability plus owner's equity. Now we are talking about liabilities is equal to assets minus your owner's equity. And if I want to take out the equity, if I want to calculate the equity, how should I do that? I should take the assets minus liabilities. Can you guys confirm if it is clear? It is just a different combination, like A is equal to A is equals to like B plus C I'm doing here. I hope it makes sense to all of us. Everybody is on same page, because understanding this is very important. If I tomorrow in the interview, if you are asked what is the formula for the equity, like how can I calculate my capital, then your answer should be like assets minus liabilities simply. And somebody is asking you like, well, how can I calculate my liability? If you are given like these two things, then simply you will take all your assets at one place and minus off with the equity that will give you the liability option. For those who are all are like aspiring for the fund accounting, so this is the your nothing but the NAV, net asset value. So when we ask the people like what is the formula for the NAV, they say asset minus liabilities. Then they like people get confused here, like liability when understanding the liability. So this is my outstanding like outsiders liability, and this is my owner's equity. So these two are different terms. Now we would try to understand the accounting cycle. What are the like basic steps we have, or the what are the like when we say cycle, it's like a regular activity. Certain steps would be there, 5 6 steps would be there, and the same activity would get repeated. In order to understand better the accounting cycle, we'll try to see the what is the definition of accounting. Can someone read out? One person?
The American Institute of
I'll do.
Yeah, I think somebody started already. You can go ahead, some
the,
lady. Yeah, go ahead.
the American Institute of Certified Public Accountancy (AICPA) defines accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and expenses, which are a part of list of financial characters and interrupting the result too often.
Okay, right. Thank you. Thank you for reading that out. So this is the formula of accounting. AICPA defined it as a art of recording. So if you look at these words very carefully, okay, these words very carefully, you can understand that. What does it mean? It says the first step as a recording. So when I say recording, it is nothing but the booking the journal entries. Simply, first step in accounting is the booking journal entry as per this definition. Second is classifying. So when I say classifying, it is nothing but the taking from journal entries and moving the entries to my ledger account. It is called classifying, like classifying into the different heads. You must have heard about the T accounts, right? Where debit credit would be there. And accordingly, if that's an expense, it would go and sit on the debit side. If it's an income, it would go to the credit side. So it's all about like classifying. And the next word in the definition is summarizing. Summarizing is nothing but it is like summary of all the accounts preparing. Now we have got various ledgers in place, right? Seven, maybe some 20 ledgers are in place. I'm taking very small example where we have different account like a salary account and insurance account, and you have capital account, okay, and you have some creditors, debtors account, you have some goodwill account, you have assets account, whatnot. These are all called as your ledger cash account. Somebody said these are all your what do you call ledger accounts. So once you are done with the ledger posting, right? Once you are like done with all the entries, what you do is you prepare the trial balance now. So what is trial balance? Trial balance is nothing but it's a, like it's a kind of statement which takes all your debits and credits with the help of your ledgers. It goes to your ledger account and take, for example, all the expenses are like debit in nature. So it would take a salary account, for example. Salary account, it will take whatever the balance is appearing in the salary account, and it will just pick up that balance and put it in the debit side. And if it finds that there is some income account, like I'm receiving good amount of interest from my bank. So that is the like income for me. Okay. So that income account would show credit balance. So what I do is whatever the balance is shown on the ledger of this income item, I'll take that balance and put it on the credit side, saying bank interest. So like that,
I
I'll
mean,
take, yeah,
yes, one question actually. Journal is the primary books of entry, right?
yeah,
Okay, I was getting confused in journal and trial balance. Sorry.
yeah. Maybe you can put it in the chat box if anybody has the question. Okay.
Okay,
So
okay,
that
okay.
it will not like
Sure, sure.
uh, break my flow.
Okay,
Okay.
sorry.
Keep doing that. I'm looking at the chat box. So trial balance is nothing but it's a summary of the account from the ledger. So try to understand, guys, like a step by step. First, the journal entries would happen. Journal entries you record, then you post it everything into the ledger, and then you go to the trial preparation of the trial balance, which is also checks your arithmetical accuracy of the books, because we are following like double entry bookkeeping system, wherein we are saying all the debits must be equal to my credits. There would be a good check. If you are missing something, then that would be caught while preparing the trial balance. In a significant manner, coming back to the again definition, summarizing is done in a significant manner means you know, right? There are like certain charts, uh, journal entries would have certain pro forma, what is called as pro forma, right? Pro forma we have, so that is nothing but a significant manner. And in terms of money, because we don't record everything, we don't record emotions and all such things. Only things which are like expressed in money, we will record. Transactions. Transaction is nothing but any event happened that is called as like transactions. Then interpreting the result thereof. So now I have got the balance. Here I've recorded transaction, I move to ledger, then I have prepared like summary. But will that summary give me some results where I can make the decision? What do you guys think? Will the summary looking at only debits and credits will give me any picture? Can I read out my how my business is performing? What is the like reality of business? Is it running into profit or loss? Can I know that just looking at the like debits and credits? What do you guys think? No, right? Absolutely. Everybody agreeing to that? No, because it is just a summary. It is telling me what are the ending balances. So I don't have anything there to talk about. So what I do is in order to like accommodate this request, in order to like know the financial statement or the profitability of my profitability or the loss or the financial state of my business, what I do is as a last step, I'll prepare my profit and loss account and balance sheet. So profit and loss account will give me either my business is running into profit or losses. It will give me that result because I'm recording all the like expenses, okay, and purchases. I'm recording all the sales. I'm recording all the incomes. Then at the end of the day, it would give me whether my business is running into the profits or it is going into the losses. So once I prepare profit and loss account, then I'll move to the balance sheet. So balance sheet is nothing but again your statement of assets and liabilities, and it also shows the position of my business. What is the current position of my business? What all assets do I own at any given point of time? Okay, liabilities will tell me like what are the things which I still owe to the people. How much I owe to the like owners, how much I owe to the outside people, or the what are my outside liabilities are. I hope we are able to make sense, right? Looking at the definition and how these things are. To make it more easy, next slide I have copied one simple like chat to make you understand. So what's happening here? It is starting with the like identifying and analyzing the transaction. As a first step, you stop yourself, you see whether that's a transaction or not. If somebody is coming to your business and telling some news, right? Some news, they are saying so and so company is like have started, some IPO is going on. Okay. If they are talking about that, that may not be a transaction to record. Okay. That is not the transaction to record. So as a first step, I'll decide what transaction I need to take care of. Then what I do is I'll record the transaction. And as we discussed, I'll post into my ledger. And this is very like a typical, like your traditional method where in Indian structure, if you are talking about, we do see that they prepare like unadjusted trial balance. This is nothing but your plain trial balance. Then there comes your adjusting entries. When I say adjusting entries, it can be entries like which are like outstanding salaries and prepaid, all the prepaid things, any adjusting entry which you might have missed to record. All such things happen here. And then you prepare the final trial balance, which ties, right? At any given point of time, my trial balance also should ties, because all debits must be equal to all the credits. So my trial balance at any given stage should and must tie. Then I prepared the financial statement. Can somebody type in, anybody, what's in your mind when you say financial statements? So what all it comes? I'll take a pause here. Just type in the chat box. Okay. What do you understand by the financial statement? I want to see the various answers. So don't wait for the people to type. Just type in your answer and let's test yourself. So what all comes to your mind when we say financial statements? What does it mean, or what you have understood so far? Okay. Somebody writing profit and loss account. Somebody says balance sheet. To know company's health. Trading, P&L and balance sheet. Okay. Profit report of company, balance sheet, P&L. Okay, well tried, all of you. Thanks for sharing your views on this question. Yeah, most of you have typed in there, and let me clear if somebody is not clear of what actually means. Yeah, most of you are right. So when we say financial statement, it includes your profit and loss account, also called as income statement. Try to understand, like in US, it is called as income statement. In India, it is termed as profit and loss account. Next is my balance sheet. Okay. And another very important is the cash flow statement. Somebody has written all. So cash flow statement also a part of your what do you call financials. So whenever we say financial statement, it also include. And if we are talking about like uh, private equity or the hedge funds or the mutual funds, right? There you have like investors. So investors accounts, investors statements are also called as also be a part of your financials. So what all I have talked about? I've talked about income statement. I've talked about balance sheet. Let's 1 minute. So income statement I've talked about, balance sheet, cash flow statement. I'm typing in the chat box, guys. And partner capital statement, or you can call it as a equity statement. Okay. And somebody rightly mentioned footnotes. Let's wait for 1 minute, guys. Azan is going on here. I'll take a pause here for a minute. If I try to speak also, it would be not audible to you guys. Okay. Okay. Thanks for all the responses, guys. Yeah, somebody is asking both TB and accruals are same in concept. Please clarify. Accrual is nothing but it is like preparing the entries. Okay. Preparing the general entries based on the period. Maybe I would ask you to like wait for the session to happen because I'm going to cover that accrual concept in detail in the coming slides. Somebody is asking change in equity and equity statements are same? Yes. To answer you, yes. So no preference shareholders thing would happen. This equity statement or the partner statement would come into picture for the mostly into like uh, what do you call mutual funds or any investment company. When you invest any fund, basically there it comes. Okay. Now let us move to the very important concept. I hope you guys understood the accounting cycle, how the things would run. Now we'll move on to the accounting concepts and convention, which is which are very important to understand for any accountant. So what do you mean by accounting concepts? When we say accounting concept, what does it mean? What does it involve? And what do I have to keep in mind all these things? First, we'll understand concepts, then we'll move on the conventions. Don't get confused. Many people mix up them and can call everything as a accounting concept without stating conventions as separately. So concept is nothing but it talks about assumptions or the conditions or the methodologies an accountant has to keep in mind. So whenever you do the accounting, right, you need to have some sense of recording any transaction into the book or taking any decisions as an accountant. Without any methodology, without any certain given rules, you can't do the proper accounting, whatever the kind of accounting you are doing. I hope you guys agree with me, right? There has to be some methodology. There has to be some assumptions at the back end for treating some item as so and so or in that particular way. So that's a reason accounting concept have come, and you might see that if you are in India, if you are in America, if you are going to somewhere in Europe, accounting terminologies mostly would be same. Accounting assumptions or accounting basics of accounting, right? Basic understanding of the accounting would remain same because of these concepts. Everywhere it is followed in the same way. Let us move on and understand what are the different concepts I have. So first and foremost, and very important concept is the business entity concept. What does this says? This says whenever there is a business and businessmen are there, this says owners and business are two different entities. For example, I'm starting a car showroom. Okay, car showroom. So this, as per this concept, my business of car showroom, that is a different entity, and myself, right, myself as a owner of that business, it has to be treated separately, two entities. So my business is one entity and I am the another entity. So whenever I get some amount to the business will record it as a liability. That is nothing but the capital. So for the business, I am the outsider. And always remember, guys, whenever you do the accounting, whenever you write your books, whenever you book the journal entries, always think that you are a business. You are not the businessman. You are for example, you are doing some fund accounting of a fund. Assume that you are the fund itself. Okay. For example, you are writing a account for a Infosys, some business of Infosys. So you have to think that you are the business itself. You are not a employee. You are not a owner of that. You are the business itself. Then only you will understand how much is coming to you, how much is going out from you. I hope this concept is clear. Yeah, this is the point I was talking about, right? Point of view of the business. Always as an accountant, you have to think. For example, if somebody has joined a one small shop as an accountant, so your thing would be you always need to think that you are the business, and you need to see how much is coming to you and how much is going out of you. That is the reason this concept came into picture, which says whenever the owner is getting into the business some amount, that is called as a capital. And whenever he takes money, you will term it as a drawing. So that you need to keep a track of this. How much owner is taking from you, how much he has given to you, and how much he has taken from you. I hope this concept is clear. And having said that, one more important thing is any personal transaction, anything like owner is doing personally, I will not record all such things. I'm not bothered about what owner is doing. Who am I? I'm the business. Okay. I'm the company. I am the fund. So all the, as an accountant, people get confused here. Okay. Whenever the people do the accounting, they get confused like whether I am receiving or giving. So if you make this concept clear that you are the business, then definitely you will see that accounting is clear. Any questions on this topic? You can just use the chat box. Excuse me. Okay, if there are no transactions, we can quickly move on. Next concept, and very important, is going concern concept. This concept says, whenever you are writing the books of account, right, you need to think or keep in mind that your business is going to run ever after. Like perpetual business, right? Perpetual life. Why these things come into place? Why should I should think in that way, right? There has to be some logic, right? The logic is like to make the things like serious, I would say, right? If people are assuming that your business is going to end next year, the seriousness or the like all the contracts you are making with all the third parties or your suppliers or the your employees, that will not be like so binding. So in order to like keep those things like very clear or very effective, this concept comes into the picture. You have to think that my business is going to run forever kind of thing. I know that's not possible, but as an accountant, we have to keep in mind. We have to assume that business is going to run forever, so that you would like apply all the policies in place. Otherwise, people will start thinking and cut loose there, right? If you get to know, or the employees get to know that my business is going to collapse after 1 year or before 1 year, then people will not be so serious about the contracts, right? So keep all these things running and active, we need to follow going concern concept. Next is like money measurement concept. This concept says you need to record the transaction, as you must be remembering, right? This was also mentioned in the definition. Money, the word money, terms money, anything which can be expressed in money should be recorded. So this is a part of your, again, the definition of the accounting terminology. So money measurement concept says you need to record only transactions which can be expressed in terms of money, right? You cannot record, or you should not record anything which is can't express in terms of money. Somebody's feeling, somebody's experience, somebody's loyalty, somebody's passion, somebody's honesty. These are all non-monetary terms. I know these are very important. This can add value. This can have wonders altogether. But as an accountant, you need to think that you need to record only transactions which are expressed in terms of money. I hope this is clear. Can you guys put it in the chat? It's been a long time. No traction on the chat box. Just to see you guys are there. And understanding also. Okay, thanks. Yeah, thank you for acknowledging. Moving on, accounting period concept. Okay, now we discuss about the going concern concept, right? Going concern concept talked about my business will run ever after, perpetual existence. Perpetual means like ever, there is no end kind of. But in order to know how my business is performing, I need to have some kind of what do you call a period in place, a period, right? A period of some months, a period of some years. So there comes your accounting period concept. So this concept says, even though the life of the firm or the company or the fund is like perpetual, but in order to like check the performance or the check the position of the my business or the fund, I need to have some period of time where I stop myself and make sure that I'll check whether my business is running into the profit or losses, and I compare from one period to another period, right? In India, as Gautam mentioned, it is like 1st April to 31st March. That is called as accounting period. In US, if I talk about, it is like January 1st to 31st December. That is called accounting period. So what is can somebody type in what are the like benefits of having this concept in place? What all I can do using this accounting concept? So basically, life of the business or my fund or the company is divided into small pieces of 12 months. That is my 1 year of the financial year. Can somebody type in what could be the benefit of maintaining this or following the financial period? Through this accounting also, we have to prepare financial statement. Yeah, we prepared that. That is one basic benefit, I would say. Yeah, anything else? We can do comparison, right? Let me give you the answer. We can do comparison from year to year. I can compare it from the last year. How much was my record? How much the profit I earned last year? And also I can check the profitability, and I can assume or make some goals or objective. How can I increase my profit looking at this financials? We get to know when was the entry recorded. Serve as a bible for accounting position of business compared to last year. Yes, so it will give me how my business is running, whether it is running into profit or losses, and at any given point of time. For example, in Indian context, if you are talking about, so what is the position of my business as on that particular day, right? As on 31st March, what is the position? What are the assets I hold? If I'm following going concern concept, I'm not stopping anywhere, then I'm not keeping a record of anything, right? So that's the reason it is very important to break the life of the fund or the company into pieces, and each piece of 12 months is called accounting year. Okay. Can you guys confirm if it is clear? Any questions across? You guys can just put it in the chat. That might help others also. If there are no questions, I would move. Cost concept, again, very important concept to understand. The cost concept says all my fixed assets, all my tangible assets has to be recorded at cost, right? The reason being we need to understand, and it is called as as a historical cost also, right? So when I say cost, what do you mean by the cost? Cost is nothing but it is how much price I've paid. For example, I bought machinery for 10,000, 1 lakh rupees. So that is my cost, the amount I have paid to buy that asset. So as per this concept, it is said you need to always record your assets, your physical assets at the cost price and keep taking out the depreciation, ignoring the market value. Why it has come into picture is we need to understand the purpose of this. For example, if I bought machinery for 1 lakh today, after 6 months, and you guys know the depreciation, right? Depreciation is nothing but the decrease in the value of assets due to its usage, or it is called as wear and tear. The value gets diminished. So the asset or the machinery which I bought today for 1 lakh rupees, 6 months, after 6 months, I'm not going like 1 year, 2 year also. 6 months, if I try to sell that, do you think I'll get 1 lakh or more? Do I get more by any chance? No, right? So ideally, I'll get less amount. Just say 90,000 maybe. I bought for like 1 lakh. Now the value has decreased and I would get 90,000. So 90,000 is my actual market price. But if I'm following this accounting system or this accounting concept of historical cost, what this concept give me the benefit as a business is, it allows me to depreciate my asset. So I'll record on the day of purchase, I'll record this transaction on the cost that is 1 lakh. And every year I'm talking about, not 6 months. Every year it allows me to depreciate my asset also by 10%. For example, if I'm following the fixed installment method, then it would be like 10%. So 10% of 1 lakh would be 10,000, right? So 10% if I am booking, and that 10,000 of the depreciation, I am showing that as an asset, like expense to my business. Do I pay that depreciation amount to somebody? What do you guys think? The depreciation amount that it reduced in the value which I'm recording as an expense. Do I record somewhere? Do I pay to somebody? Actually, no, I'm not paying to anybody, right? Simple. I'm not paying anyone, but still because of this concept, I'm getting the benefit, right? I'm getting the benefit of the 10,000. Correct? Hope it is making sense. So every year I'll reduce my asset to 10%. At 10,000, I'll record as a depreciation, which is like kind of expense I'm showing into my books, even though I'm not paying it, right? So this is the like benefit of this. This is just an example for you guys to take a look. Self-explanatory, I would say. So in this case, the market value is like 250, but as per this concept, because I'm recording it everything at the cost, I will just reduce the depreciation part. I will not go to the market value. I hope I'm making sense. Question to you guys, what about the investments? For example, there is a mutual fund which is investing into some other funds or some other companies. So basically it is like investing into financial companies. So there is no physical assets involved. Do I still need to follow the cost concept there? What do you guys think? Because that investment is also my like asset, right? So what should I do there? Do I need to follow? If you guys are writing yes or no, I want to answer also in this case. If you guys says no, then what to do? If you're not, you are saying I should not record those investment as a cost, right? Then what should I do? What should I follow? What should be the other method? If not cost, then what? Yeah, NAV based. Somebody says FMV, somebody says asset. Yes, we revalue the investment with unrealized gain. Yeah, Anki Reddy and Ravi, you guys are right. So what we do is we need to take the fair market value of those assets, right? If I'm the mutual fund, I'm the accountant, okay? So I'm the mutual fund. I'm investing somewhere into some investments, okay? Then those assets cannot be recorded at the cost. So as per the accounting policies, I have to record those assets using the FMV, that is nothing but the fair market value. So how to ascertain that? There are a lot of formulas would be there. There are different methodologies are there. To tell you simply, you can compare or check the value of those assets into the open market simply. For example, you are a mutual fund ABC and you are investing into the securities of TCS. Then how to ascertain the value of those things, those shares? Simply you go to the share market and check the today's price or the price when you are closing your books on 31st of March in our case. So on 31st of March, you go to the market and see what is the valuation or the price of the securities where you have invested, right? And somebody rightly said there would be a unrealized gain and loss also involved. For example, I've bought again 1 lakh worth of securities, and after 6 months, same example, after 6 months, the value has increased now from 1 lakh to it has gone down, gone up to maybe 1,20,000 today. If I go to the market, I see the value as 120. So the 20,000 is my unrealized gain, simply. All investment we have to record in FMV. Yes, as long as you are like maintaining financial assets, then yeah, FMV would be there. If you are holding any tangible assets or some physical assets, then it would go to the same as like cost. It depends on the kind of assets you are holding. So for the investment company, mostly investments would be the other shares, other companies' shares, or the other companies' investments. Then in all such cases, it would be FMV. Can you guys confirm if it is good for the people who are hearing this for the first time? Can you confirm if all good now? You got the concept of FMV? I'm asking to all the new people who got it for the first time. Okay. You guys need to keep putting your thoughts. Okay. Dual aspect concept, I think we have already covered. It is nothing but the every transaction must have the two faces, like giving aspect and the receiving aspect. So as per this concept, dual aspect concept says whenever you have one debit in place, there has to be corresponding credit. There should not be any entry which is only one-sided. It should not be only one-sided entry. For example, if you are paying salary, so salary is a one item everybody knows as per the looking at the name. There has to be some other leg also attached to this. So what would be the other leg when I pay the salary? If I'm recording the transaction and the transaction written as salaries paid. It's simple, right? Cash or bank, somebody has written. Yes, cash. So whenever you are writing, or if you look at all the software, everything is built on this concept only. There can't be any transaction which would be like one-sided. So whatever the software you talk about, starting from as simple as Tally, Wings, Focus, whatever the basic software, to the big softwares which we work on, all are built on this concept of dual aspect, where you if you put any debit, then that particular software will not accept unless you put another credit entry, right? Example, if you are doing some sales, so what are the two things? Cash, and another one is sales. So one is like you are receiving the cash and you are giving away some product or the shares from your business. In this case, what do you guys think? We have bought some goods of 20,000 and discount received. So you guys maybe confused, like 3 items are there. It can have multiple line items, guys. Don't get confused. But if you look at the amount here, right? 18,000 plus 2,000 is 20,000. So my total of debit, which is 20,000, must be matched with my total of credit. In this case, I do have multiple lines on the credit side, but the total should be same. You can have multiple lines in the debit, multiple lines in the credit side, but the amount should be same on the both the sides. So this concept says, again, this concept is the basis for the accounting equation, right? Because of this concept only, this accounting equation or the all your assets should be equal to liabilities and owner's equity we discussed, right? Because of this concept only, this should match. If you are not following this concept, then definitely there would be difference in your balance sheet. And I know we used to write a suspense account, right? कहीं भी कुछ नहीं आता है तो we'll just simply put it the suspense account. No, in the reality you can't do it actually. So you need to follow religiously the dual aspect concept, then only your balance sheet will automatically tie. Next is realization concept. Realization concept, as the name says, it says profit is earned when the goods or services are provided to customers, not when they are actually received. Okay. I hope I'm clear. This is very simple concept. This concept says you need to record the profit only when you are sure about that or when you receive it, not when the actual services are provided, right? This is very much similar to this concept. If you are talking about, just 1 minute guys, okay. Okay, matching concept or accrual concept, I would say they have very thin difference. That is why I have clubbed them. So as per the matching concept, this says if any income related to particular period should be recorded in that period only. Similarly, any expense related to that particular period should be recorded in that period only. For example, our accounting period is Jan to December. And if I am paying salaries for the month of December, but actual cash if I am paying in next year, right? Salaries are related to December. If I am paying in the January 2024, but if we are following this concept, accrual concept or the matching concept, this concept says whatever the expenses related to this year should be recorded this year only, even though actual payment is happening in the next year. Is it clear? This will these lines will make you more clear, right? Revenues are recognized when they are earned, but not when the cash is received, right? Similarly, expenses are recognized as they are incurred, but not when the cash is paid. In our example, salaries we talked about, right? Salaries related to December month. That is why we have to record in December month only. Assume that I am recording 1,000 every month. 1,000 salary I am paying. Now the December month has come. It is today is like 12/31, like 31st of December today. But till now I have not made the payment to my employees. Right, 1,000 for December I have not paid. But if I am following this principle, as an accountant, I have to follow this principle. Then what I do on 31st December, I will record this amount as the outstanding salary. Make sense? This is very important, guys. This is the base of all accounting, I would say. All accrual concept, all the accounting, accrual basis of accounting, mercantile, whatever we discuss, right? It goes through this principle only, right? This also says you need to record the income when they are earned. What does it mean? If on 31st of December, I got to know about some certain income I would receive for my fund. For example, you got the bank statement on 31st of December, stating that the bank is going to pay you or bank is liable to pay you some 500 as a bank interest. So that 500 is income or the expense to the business? You guys tell me quickly. Bank is saying I will give you interest of 500 because of my deposits, right? Income. Every one of us agree that it is an income. But that income got credited in my books on 5th of January next year. Do you guys think should I record it on 31st of December or not? That 500 rupees. What do you guys think? Do I need to record? Yeah, very rightly said, Gautam. As per this concept, if you're following this concept, then you have to record. Because first thing is that 500 is related to this year. That is related to December month and this accounting period, then definitely I have to record that. And also we follow the accrual system, which also says anything outstanding, anything which is to be paid, anything which is to be received, which we are sure of, then we have to record that. You guys are correct in terms of understanding. Yes, if it is confirmed, it should be recorded. Yes, absolutely. And if something is not confirmed, you may or may not get, right? Such things, we will not record it. Another concept is there in place, Mubin. We'll discuss that. I hope you guys are clear so far, like matching. When we say matching, it is the matching of expenses or incomes to the same period. That is why it is named as a matching concept. So revenues are recognized when they are earned, but when the actual cash. So if you guys must be looking at the words here, terminologies here, right? It is nowhere dealing with the cash. It is not concerned about the cash, because there can be some instances when you run the business, right? When you are doing the accounting for any funds also, there may be many scenarios where you don't deal with the cash instantly, right? But you have to give something on the credit. You have to buy something on the credit. You have to take the loan or make the payment after a certain point of time. That is the reason, guys, there are a lot of departments in the companies called as accounts payable and receivable, right? They do the same thing. Transactions happen, but the money would be paid or would be received in the future, which is like after 3 months, 6 months also. This all happens because of this very important concept called as matching principle or the accrual concept. I hope I made sense here in making you guys understand. Yeah, I do have the example here for you guys. You can just take a look at that quickly. Salary we discuss, right? So if you are paying in the future, which is related to the previous year, then you have to record in the previous year only. And similarly, if I have paid extra, which is called prepaid, right? That I have to deduct that. For example, I have to pay rent of 1,000, and in December month, I paid for the month of January 2024. Then as per this concept, you need to deduct that 1,000. That is the reason, if you guys can recollect, right? While you are doing the accounting in your books, in like graduation or the intermediate level, if you guys can recollect, we used to minus the prepaid account, right? Rent and minus the prepaid. So this was the reason this concept was in place. where we because of which we were deducting the prepaid. Because as per this, if my monthly rent is just 1,000 and I've paid 1,000 extra, so as per this concept, I have to remove that 1,000 extra from my books. I will show only 12,000 as my rent paid. Same example which I've already talked about. We have sold goods to one customer in July, but the payment is happening in the Feb of the next year. Then, even though the payment is happening in Feb, but it would be recorded in the current year because I'm following the accrual system. I'm sure of the money to be received. Yeah. So with that, we have finished the accounting concepts. I think we have finished the time also. Quickly, I'll take another 10 minutes maybe to finish off these conventions. So hope you guys are okay with that. Can you guys put it on in the chat and confirm? Yeah, thank you. Thank you guys for confirming. Okay, accounting conventions. If you are talking about convention, these are again the common practices which are like followed across the world, which are again very important, and irrespective of the various jurisdictions, whether like it is different countries, but there are common things which are like common everywhere, which are followed throughout the world. Materiality concept, convention of materiality also it is like called as materiality. When we talked about materiality, it is nothing but it is not the material. First you need to understand this is not talking about the physical material as such. Materiality, if you look at the like linguistic, another meaning of materiality is the uh, significance, important. So this concept or convention says you need to record all the transaction, you need to give the facts, you need to put all the things which are material in nature, right? And you can avoid, when I say all the important things, significant things to be like furnished or shown in your books or the in financials. In other words, I am saying all the immaterial things you can ignore that, right? All the immaterial things I can ignore that. For example, there is a company, say XYZ Limited, which have bought like 600 worth of stationery for 6 months. So as per the if you are following some accounting rules and all, every month I am using some 100 worth of my stationery. So as per the actual accounting rules, I should not go and record like 10, like 100 in 1 month, 100 in another month, like 6 months, I am booking 6 transactions. So if I keep in mind that only material things I need to keep in mind, then I would say and record only like one transaction because the amount is very small, right? 600 is very small amount for any kind, any business and very immaterial. Nobody would question you, right? So that is very like immaterial in nature. So simply what I can do based on this concept, I'll simply book one entry and sort it out, right? So all the material things, all the like important things I would record, all the immaterial things or small things I can ignore that as per this concept or convention. There comes the another concept which is full disclosure. This disclosure also, somebody can put on mute. Okay, thank you. The full disclosure concept says whenever you are preparing your financials and footnotes, whenever you see the term notes, it is called footnotes, which will have like all the details, so like when your company started, what type of company it is, and what kind of shares you have offered, what are the different expenses, how you are recording, what is the methodology you are following. All such things would be written on the notes section. Okay, footnotes they are called as. So this convention of disclosure, which is named as full disclosure, this says you need to furnish all the information which is important. You should not hide anything. You should not hide any material information. Again, this is related to the previous one which we have discussed. Like any material, any important information which you think would change the decision of the stakeholders, right? You need to furnish that, right? Whenever like we are closing the books, you need to make sure that, for example, what could be the examples? Any examples you guys aware of, which should be a part of full disclosure? So I had here let me check in the chat box. Financial statement. No, I'm talking about any. Those are the basic thing. Balance sheet, income statement. You need to do any. When I talking about full disclosure. So what could be the examples of the full disclosure? You guys understand the terminology like full disclosure? It's nothing but the you need to publish the information. Performance fees percentages. Yes. Income source. Very good, Gautam. Income source, expense like money spent. Okay. Change in the board of directors. Do you think it is necessary to furnish that information in the notes? Do you guys think change in the board of directors? Do the company need to publish? Altaf says yes. Yeah. Change in the your methodology. Change in the methodology of keeping your stock. Right? FIFO, LIFO, weighted average. There are multiple things. So anything which is important in nature, right, should be disclosed. You should not keep it with you. If any good client you had earlier, or there was a big portfolio manager who used to work for you, and now he's no more, and he used to carry like big name into the market, and he's no more, or he moved from your company. All such things should be disclosed into the footnote section of the financials. Conservatism, as the name says, it is coming from being conservative. This says anticipate no profit but provide for all the losses. Okay. This is like this conventions came into the picture because of because of these, there are a lot of chances of some losses, right? When you have given something on the credit, and after a certain period of time, you got to know that that money is like you are unable, you will not be able to recover that money in the coming days, right? Because of all such scenarios, this says if income had to come, just wait for it. Okay, don't write it down and inflate your business. But if you think that you are going to get some losses, or your business is going to suffer something bad in the future, then definitely you have to provide for that. When I say use the word provide, it is nothing but this, somebody is writing in the comment section, provision for bad debts. You must have heard about, right? So provision of bad debts is like mandatorily you must have seen while you were doing your accounting in your college days. So it says whenever you are giving something on the credit, 10% you can keep it as a provision for bad debts. Meaning if something is going wrong, if some of the parties is not paying on time, or there are very likely that they are coming back to you and making the payment. So this is a kind of loss which is like a futuristic in nature, but still, because we follow this conservatism convention, as per the law, or as per the accounting rules, it is still allowed to make the provision for the bad debts. And depreciation, right? Depreciation is again an example. you know that your fixed asset value is going to diminish in the coming days, then how you get the amount back, right? Then because we follow this conservatism, this is accounting principles or the accounting policies allow you to write something called as a depreciation in your books. And the last one on my plate is consistency. Consistency consistency means if you are following any methodology, any policy you are following, you should be consistent in that. Example we usually take about the, like, if you hold some material or the stock, physical stock, then do follow one method. We know, right, there are different methods we have for like maintaining the stock: FIFO, LIFO, first in first out, last in first out, weighted average method, different methods we have. So if you are maintaining one method, uh, maintain this next year also maintain the same thing. Why it is so important? Because I need to compare that, right? For example, in the first year I've followed FIFO method. If I jump to the next year, go and jump into the next method of like LIFO, then I can't really compare my business how it was running, right? Same goes with the depreciation also. We have a number of methods, like many methods of calculating depreciation. Straight line we have diminishing balance method, annuity method, uh, unit based method. There are some 8, 9, 10, I think. There are like different depreciation methods are there. So as per this conventions of consistency, this says if you are following any policy, just follow it for the at least for the long time, at least for the 5 years or 10 years. When I say you can, there is an option to change the policy, right? Methodology. But if you keep changing your methodology or the method of doing depreciation in our example, then you can't compare your business, because 1 year you used fixed installment method and next year you use some weighted average method. So that is there is some kind of like inconsistency, and the picture you are getting at the end of the year, whether it is a profit or loss, that would not be very accurate picture because of this inconsistency in following the methodology or the practices. Here is the example. First year, sorry, I have followed a straight line. Second year, I have followed written down. Third year, I am following units of measure method. Then I will not having the clear picture. So as per this concept or the convention, if you're following if you're following any methodology or the policy or the principle, you should be consistently follow that rather than jumping from here and there. Now, are you ready? Are you guys ready for the quiz? We have come to an end. You guys are ready for that? In the chat box, based on your options, I'll go for it. This will tell me whether you guys have understood the concepts or not, what we have discussed. Let's check your understanding. And no prompt, just put it in the chat box. Here is the first question. Under which of the following kinds of business concept it is assumed that the organization will last for a long time? And what is the term I use for that? Going concern, what is the term I use for the life of the company? Perpetual. Yeah. Thanks, Harsh, for mentioning that. Yeah, so all the right answers. Going concern concept says that my business would run perpetually, forever kind of thing. And consistently it will go on for year and year altogether. Yeah, answer is right. Next question on the screen. A business firm is a separate and distinct from its owner. Which concept says that? Everybody write it for them. Don't just look at the other's answer and get satisfied. Write your own answer. This will help you to remember the things also. Absolutely right. Everybody says A, business is separate entity from the owner. Rightly said. Business entity concept says about that, speaks about that. You guys are right. Question number 3 on screen. It is assumed that the only those transactions that could be expressed in terms of monetary terms should be recorded. This is, I think, easy because the question itself has the answer, right? Yeah, money measurement concept. So what about the experience of my employees? I have all experienced employees. Can I record that? They are very talented, and they understand accounting very well. They are all CPS or CS, but still I can't record that, right? Because I can't express that thing into the money for accounting to have something. So this can be tricky interview questions also, guys. Somebody can say these are the various things. Can you tell me whether which is the transaction to record or which is transactions not to record? Then you can tell this concept, like because of the this money measurement concept, I don't record all the things, but I would record only the things which can be expressed in terms of money, right? Moving on to the next question. Question number 4, 4 on screen. Entire life of a business entity is divided into shorter period of intervals for 1 year mostly. Which concept says that? Are you guys sure? The answer is D. Okay. I would allow one person to unmute, and Narendra, maybe Narendra answered this. So why should I do that? Why should I should divide the life of the company into certain period of 1 year? Over to you, Narendra. Would you like to go for it? Anybody else want to explain this? Why should I divide the life of the company or the fund into 1 year? You can unmute, guys. I'm giving the open forum now. One person. Tell your name and go ahead.
Yeah, Devinder, yes, I mean, I
Yeah.
just need to tell that for recording a yearly transaction, that could give a very easy access to the business also, that this particular year had this kind of incomes and expenses, so it would be better for that to get.
Okay. Okay.
To know the
Thanks.
financial status of the business and to
Who is
inform
this?
the stakeholders the status of the business.
Who is this? Can you just name yourself?
This is Sayyid here.
Okay. Yeah. Can you repeat your answer, please?
To know the financial status of the business and also to
Right.
inform the stakeholders the status of the business by reporting
Yeah.
yearly on a yearly basis.
Right. If I think that my business is like keep on running, if I'm not
Yeah.
stopping somewhere, then I don't have, as Gautam also mentioned, for comparison, yes, it is required for comparing from like 12 months, that is 1 year for us. So 1 month, 1 month, 1 month, we need to do stop there, close my books, do the accounting, right? And do the comparison of my business. Yeah. Thanks guys for adding. Then the last question, question number 5. Anticipate no profit and provide for all possible losses. Which principle says that? Okay. So just to ask again, counter question. If somebody, one of my investment, I got some news that this investment is going to give me some kind of bonus. I'm the fund, okay, I'm the company. I've invested in ABC company. And I got a news that very soon there is a company which is going to give some kind of bonus shares, right? Bonus shares to all the investors. So I'm one of the investors. So should I go ahead and record that income? So when you say no, can you explain like why no? No, why no? Anybody want to take this opportunity? Why should I not record that profit or income? No, no one I have in the chat who can explain. Because it has been gifted. Oh, no, it is not because of the gift, Devinder. It is like because of this convention, right? This convention of conservatism says provide for all the losses. It is allowing you to record all the losses, any expected losses, but it is asking don't record any anticipated profit unless it is confirmed. Okay, unless it is confirmed. Because if I say don't record anything which is coming in as a profit, don't record anything, then it will contradict with your accrual concept, which says anything, any expected income you have to record, right? If you guys remember and recollect. Accrual concept says you need to record any income which you are sure of. But if you say, no, you don't have to record anything, no, that should not be true. For this understanding, this conservatism principle, this is talking about any expected profit, which is like not confirmed, right? And as per this concept, as Harsh mentioned, this convention says loss to be recorded, any possible losses to be recorded, but not the possible incomes, right? Moving on. Yeah, I think that's it. Yeah, I have some more for you guys. Question number 6, accounting procedures and accounting practice should remain same from year to year. So which is principle says this? Gautam says A. Other guys are confused. Is it so difficult, guys? I don't know. We have some 26 parts, 25 participants, and very few answers. Is that you guys didn't understand? Yeah. Somebody says B. No, not B. It's A only. Consistency principle or the conservatism, which talks about my accounting policies every year should be same. It should not, we should not be jumping from one to another, right? Okay, another one on the board. An inkstand has been purchased by a firm for a nominal amount, and that would run for the 4 years. Okay, that inkstand would work for and would be used for 4 years. Should I treat that as a fixed asset? So ideally, it should not be treated as a fixed asset. So which out of which principle? B, materiality. Okay. Somebody's written A also. So yeah, most of you have given the answer as B, that is materiality. It is insignificant, right? Because the inkstand, which is like of worth rupees some $100, right? I will not be carrying forward for so years and treating that as a fixed asset. I'll simply write it as an expenses and book it accordingly in the just one shot. Under question number 8, under which conventions of accounting the contingent liabilities are shown as a footnote? or explanatory note. Contingent liability means any liability which might occur, right? Which might occur. So the answers in the chat box I see as A. You guys are right. Full disclosure says that any information which is like relevant and very important for the stakeholders should be disclosed. Like in this case, any contingent liability. Contingent liability is nothing but the any liability which can happen in the future, which can happen in the future. As per this concept of full disclosure, we will disclose that information. Question number 9, on board a business firm creates provision against doubtful debts. As per which convention? Let's be quick, guys. We have to finish it off. I think another one is the last question. We have talked enough of it, right? Somebody is writing A. No, answer is not A. So which convention says you can provide for the losses, right? As we discussed, it is the name says conservatism. Conservatism says you have to provide for all the losses, but don't expect the don't do same with the income or the profits. Question number 10, that's the last, I think. The experience of my directors, loyalty of my employees, and honest, they are everything. But those are not recorded in my books. As per which concepts? BD. Oh. I'm seeing some B and D also. So it's a non-monetary, guys, as Harsh mentioned there. It's a non-monetary things. Then accrual concept, no. See, the question is directors' experiences. My directors has a lot of experience. They are very well known in the market. My employees are very loyal to me and they are very honest, right? But I can't record all such things. As per which concept? The answer is money measurement concept, right? Because as per money measurement concept, I have to record only transactions which are expressed in money terms. This experience, loyalty, and all such things will not be considered or converted into money, right? So that's where, as per this concept, we will not record that. That's it to the end of presentation. And this is our organization called as Career Guidance Council. Just type in on the LinkedIn and do follow for such webinars, accounting, non-accounting, and your interview preparation. All the information you would see on this page, go there, connect to that, and take a lot of quizzes are being shared there. A lot of stuff are shared there, which would help the job seekers and the experienced folks as well. And this is my profile at the LinkedIn. If you guys want to get connected to see some quizzes and some materials on the accounting, you can follow and keep seeing there. And in the coming days, guys, I would come up with some more sessions on the accounting side, on the journal entries, on the fund accounting, all such things would be there. Do keep in touch with us and do follow our page regularly. And there is a YouTube page also with the name Career Guidance Council. Without a space, if you can type, you can see a lot of our videos are already uploaded there. One last thing, I hope this session was helpful for you guys. Just type in the comment section if you like this session and any points to improve in the next 1 minute. Thank you all for all your feedback, guys. There are numbers given for our admin of, if you are not added so far to our WhatsApp groups, then you can just send the request and take a benefit of like job updates and all the sessions like today's. Okay, thank you, and have a rest of the day. Enjoy your weekend. Thank you. Thank you, admins, for your patience and having the smooth running of the program. Thanks a lot.